Right now, we're seeing trillions of dollars being bent on artificial intelligence. But here's the big question. Is it the foundation of a whole new industrial revolution, or is it a bubble that's just about to pop in a really spectacular way? Well, by 2026, we might finally get our answer. Let's break down what's really going on.
Okay, first, let's just try to get our heads around the scale here. Between 2025 and 2030, analysts think the global spending on AI is going to be somewhere between $5 and $8 trillion. To put that in perspective, that's like taking the entire economy of Japan and pouring it all into one single technology. It's just massive.
So make no mistake, this is not just another little tech trend. We are literally living through one of the biggest waves of corporate investment ever. Ever recorded. This spending is an incredibly powerful engine, not just for the tech world, but for the entire US economy and really the whole world.
Which brings us right back to the central question of this whole explainer. Is all this crazy spending creating a sustainable new engine for our economy? Or are we just watching a giant bubble inflate, waiting for the pin? The answer for 2026? Well, it's not a simple yes or no. The rules of the game are being completely rewritten as we speak.
And this brings us to our first major theme. You see, if the last couple of years felt like you could just blindly throw money at anything with AI in its name, 2026 is all about something called the Great Dispersion. The market is finally getting smarter. It's starting to pick winners and losers.
And look, it's not just us saying this. As BlackRock pointed out late last year, these huge themes, these mega forces like AI, they're the new anchors of the economy. They aren't just passing fads, they are the fundamental things driving market returns. But, and this is the key part, the way people are investing in this megaforce is changing, and it's changing fast.
Now take a look at this. This chart shows the performance of the big tech giants, the hyperscalers that run all the cloud infrastructure for AI. For years, a rising tide lifted all these boats together. You bought one, you might as well have bought them all. Well, not anymore. You can see their paths are splitting apart, which is stone-cold proof that the market is now digging in and scrutinizing each company's strategy, and more importantly, their actual return on all that cash they're spending.
So what does this actually mean for you? Well, the old strategy of just buying a big tech ETF and calling it a day is becoming way less effective. You can no longer just bet on AI as one big thing. You have to get specific and bet on the right parts of the AI ecosystem. And that leads us to the next layer of the story. And honestly, this is where things get really, really interesting. Because if you want to find the true opportunities in 2026, you've got to look beyond the software. You have to see the massive industrial ripple effect this AI boom is creating.
Here's the plot twist. We think of AI as this abstract digital thing that just exists up in the cloud. But that's a total myth. AI is built on a very real, very physical foundation of steel, concrete, copper, and an absolutely unbelievable amount of electricity.
And this slide just perfectly illustrates the picks and shovels of this modern-day gold rush. Those trillions in AI spending, they're flowing directly into these industries that might seem kind of boring. We're talking about construction companies building the data centers, energy producers scrambling to power them, commodities like copper to wire everything up, and all the heavy industrial equipment that puts it all together. This is where the digital boom smacks right into the real physical economy, hard. But just as this industrial picture starts to come into focus, a massive wildcard gets thrown into the mix: Washington, D.C. In 2026, politics and government policy are about to inject a huge dose of uncertainty into this whole picture. And it really could change everything. So first up, we've got fiscal policy. This chart here shows the impact of the new administration's stimulus package, which has been nicknamed the One Big Beautiful Bill Act, or OBBA. Notice how it's front-loaded? It's designed to pump nearly half a percentage point into U.S. GDP growth in 2026 alone. Now that's a pretty big tailwind for the economy, but look at how it quickly drops off. That creates a potential cliff down the road.
At the exact same time, we're facing this pivotal transition at the world's most powerful financial institution. Federal Reserve Chair Jerome Powell's term is up in May 2026. His whole approach has been very measured, very data-driven. But the leading candidates to replace him, folks like Kevin Warsh or Kevin Hassett, are seen as being much more aligned with the administration's pro-growth agenda. This could mean way more aggressive and faster rate cuts, which then raises huge questions about inflation, the value of the dollar, and maybe most critically, the independence of the Fed itself.
And hey, as if a fiscal cliff and a Fed transition weren't enough to deal with, there's one more wild card. A Supreme Court ruling is expected early in the year on the president's authority to impose massive tariffs. This could either calm global trade or just unleash a whole new wave of volatility into the market. It's another major unknown.
So what does this all mean when you put it all together? You've got this massive AI investment cycle, a market that's getting way smarter, and profound political uncertainty. Well, it all points to a single verdict. We are entering a brand new economic phase defined by what's being called the Great Releveraging. This quote from Freya Beamish over at the research firm T.S. Lombard just captures the moment perfectly. See, after years of paying down debt, the private sector, we're talking both businesses and households, is in an unusually strong position. They actually have the room to start borrowing, spending, and investing again. The conditions are just ripe for this new cycle of spending to kick off. I mean, debt, compared to the size of the economy, is at a 2-decade low. The Fed's rate cuts back in late 2025 have already made borrowing cheaper. And with economic growth picking up speed again, it gives companies and people the confidence they need to take on new projects or make those big purchases. So, the crucial point here is that a major economic shift is underway. It's being powered by this AI investment boom, and now it's being encouraged by both government spending and interest rate policy. The era of being cautious and just sitting on the sidelines, well, that might be coming to an end very, very quickly. Which leaves us with one final question. The great releveraging is here. Are you positioned for it?